Prices are climbing, wallets are shrinking, and the financial rules we thought we knew are changing fast. In 2025, inflation isn't just a number on a government report. It's something you're feeling every time you shop, pay rent, or check your investment accounts. Today, we'll break down what's really going on, why it matters for your personal finances, and the exact steps you can take to stay ahead. Stick around, because the opportunities hidden inside this inflation storm might surprise you. First, let's talk numbers. The US inflation rate is currently sitting at 4.1% year over year, slightly higher than the Fed's target, but lower than last year's 5.6%. In the UK, inflation cooled to 3.8%, but food and housing costs remain stubbornly high. Nigeria is battling double-digit inflation at 18%, driven by fuel and import costs, while India's inflation sits at 5.2%, mostly due to energy and food supply chain pressures. Now, those percentages might sound small, but let's put them into perspective. What you could buy for $100 in 2020 now costs roughly $125 in the US, and even more in emerging markets. That's not just an inconvenience, it's a silent tax on your money. In 2025, inflation isn't being driven by just one factor, it's a perfect storm. Housing. Rents in major US cities are up 8% year over year. Energy. Oil prices surged 12% after supply chain disruptions in the Middle East. Food. Global wheat prices rose 9% due to extreme weather events. Healthcare. Medical costs climbed 6% in the US, outpacing wage growth. And here's the tricky part. These costs hit different groups differently. A college student feels the pinch in groceries and rent. A retiree feels it in healthcare and utilities. Inflation doesn't just make your grocery bill higher. It changes how your money grows. Or doesn't grow. For example, savings accounts. If your bank pays 3% interest but inflation is 4%, your money is actually losing purchasing power. Investments. Stocks can keep up with inflation in the long term, but certain sectors, like tech, are more sensitive to rising interest rates. Debt. If you have fixed-rate debt, like a mortgage, inflation can actually work in your favor by reducing the real value of your payments over time. Retirement planning. A $50,000 annual retirement budget today will need to be about $61,000 in just 5 years to maintain the same lifestyle. Here are 4 strategies that can help you beat inflation in 2025. Shift into inflation-resistant investments, commodities, real estate, and tips. Treasury inflation-protected securities are good hedges. Cut variable costs first. Lock in fixed rates where possible. Think long-term utility contracts or fixed mortgage refinancing. Diversify globally. U.S. markets are strong, but emerging markets with low debt can outperform in certain inflationary periods. Side hustles and income streams. A second income isn't just nice to have, it's a buffer against unexpected price spikes. Believe it or not, inflationary times can create openings for smart investors and savers. For example, real assets like farmland and rental properties can increase in value faster than inflation. Dividend-paying stocks can provide consistent cash flow, which is more valuable when prices are rising. Skill investments, learning high-demand skills, can boost your earning power faster than inflation can erode it. So inflation in 2025 is real, it's complex, and it's not going away overnight. But with the right strategies, you can not only protect your money, you can make it grow. What's your personal strategy for dealing with rising prices? Drop your thoughts in the comments below, and don't forget to like, share, and subscribe for more weekly personal finance updates.